This is the new weekly forecast for this week and the trading opportunities that we have coming up, the fundamentals so far. So we're going to start off with the macro fundamentals, move on to the economic data, and then the technical side. The first article that we're going to start off with is this one here. The markets rocked by Trump show economic fear across Wall Street. That's pretty much what this entire article is about. The key things here is that we're seeing a lot more economic uncertainty, which are stemming from President Trump's policies, specifically the tariff hikes, spending cuts, and reshaping the overall global economic framework. As you continue down, they start to give you a little bit more details about this. But here, overall, the article is just signaling more risk-off sentiment, where we're seeing that in the global markets, when it comes to currencies, commodities, or equities, we're seeing a flight to safe haven assets like the JPY, gold, and even US Treasuries, while equities, especially that are tech heavy indices like NAS 100, for example, and risk sensitive currencies, they're struggling a lot more. So when you're looking at GBP, JPY, or any of the other currencies that are more on the risk sensitive side, you're seeing a lot of those dropping down, and also the safe haven counterparts gaining a lot more strength. We're also seeing overall a USD weakness. So the concerns around Trump's economic policies are leading to potential USD weakness in the short term, especially against the yen and potentially against the euro and GBP as well. As investors and traders, they're anticipating slower growth and more volatility in the US economy. We're also seeing the yen strengthening. So if you're trading GBP JPY, Euro JPY, USD JPY, odd JPY, or any of those other ones, you're seeing that the JPY, for the most part, is outperforming many of the other currencies in this environment because of its status as a safe haven during the times of economic instability. The next one that we're going to move on to is this one here. It is CPI and PPI week. So that's why we want to make sure that we're keeping a close eye on inflation data. And same thing here, we're expecting to see some more economic uncertainty when it comes to the inflation aspect as well. The US consumers' expectations for the year ahead inflation rose slightly to 3.1%, which indicated a slight uptick in the inflation concerns. However, the 3-year and 5-year inflation expectations, they were steady at 3% rate, which may offer reassurance to policymakers and the Fed when they're looking at this, that long-term inflation expectations do remain stable. The second thing is the overall economic pessimism that's increasing. So consumers are growing more pessimistic about their financial situation, with a significant rise in the share of people expecting that their year ahead financial situation is going to worsen, up to around 27.4%, which is the highest in 15 months. And this also reflects the increased uncertainty about the broader economy, with worries about unemployment, debt, and credit access. As you continue down into the article, you see some more of this happening here as well, where you have the job market concerns and also the overall economic outlook, where the consumers are more concerned about the job prospects and expecting higher unemployment rates in the next year. The probability of missing a debt payment has also increased, suggesting growing financial stress for households. And when you're looking at overall equities in general, all of that is also going to be pretty much priced into the markets, where you're seeing that investors are sitting on the sidelines and moving more into the safe haven assets and commodities instead. And then the third one that we're going over here is the House Freedom Caucus backs stop bill to avert US shutdown. As we continue down into the article here, so the vote on the stopgap is set for Tuesday, and Johnson can likely only afford to lose 2 Republican on the measure if Democrats line up uniformly against it. So basically, this is a bill that is to basically temporary freeze spending for the next 6 months, and it aims to avoid the government shutdown and buy more time for President Trump's agenda. This bill includes provisions such as the $6 billion for defense, $440 million for immigration reinforcement, $20 billion cut for the IRS budget. And Trump's support for the bill is key because it will need to clear the Senate, requiring at least 7 Democratic votes to pass, with the Senate needing 60 votes to move forward. As we continue down, we're seeing a lot more of the opposition challenges here as well. So while the bill has strong backing from the Freedom Caucus, there are still concerns from Republican holdouts who are opposed to the proposed cuts in spending levels. The bill's passage through the House is expected to be tight, and Trump has threatened to back a primary challenger to one of the dissenting Republicans. And the overall, why do we care about this as investors and traders? The overall impact on the financial markets is the ongoing uncertainty about a potential government shutdown. We go through this almost every year, and the government obviously does not shut down, but we get close enough to it, and we also see that the market kind of has started pricing all that type of stuff in already. So this is not something that's huge that's impacting the markets compared to the first two articles that we went over. And then this one here, especially if we're trading in yen pairs. So this one is about Bank of Japan's next rate hike, which is likely in June, says the ex-official Mama. So this is, and then Bloomberg is also going to give you some key takeaways if you like, but I want to be a little bit more detailed in this. So this is a former executive director in charge of monetary policy at Bank of Japan, Mama basically, and this article says that Bank of Japan is unlikely to raise interest rates until June 2025. Although there is market speculation for an earlier move in May, he is suggesting that the central bank will stick to its pace of a rate hike every 6 months. And there are several factors that are influencing this decision, including economic conditions, global uncertainties, and political factors surrounding Japan's upcoming national election in July. He also highlighted that annual wage talks, particularly with Japan's largest union group, could impact BOJ's decision as well. And the wage growth above 5.7% could push the central bank toward an earlier hike. However, he believes that the yen stability and the political environment make June a more likely date for a rate hike, although September or later is also possible. So that's what we're looking at when we're looking at macro fundamentals. And then coming on to the economic data point, we started off quite easy this week already. Going into tomorrow, we have the JOLTS job openings coming out from the US. Continue down onto Wednesday, we have CPI data coming out. Then you have Bank of Canada's interest rates also coming out, and the press conference that follows after 45 minutes or so. On Thursday, you have the PPI coming out, so inflation from the producers aspect. And then Friday, we end off with some consumer sentiment and inflation expectations. So quite an easy week, but mostly the focus is on inflation. Coming on to the technical side, we're starting off with the monthly. So with US30, we have already kind of tapped into this monthly support where price kind of hangs around here. So this is a very important area of liquidity as well, which is going to be that 41,600 mark. And then we're going to drop down to the weekly time frame. Overall structure is still quite bullish, and then right now we're still bullish here as well on the weekly time frame. Nothing has really changed. If anything, I'm going to create a zone here. It's going to be a pretty big zone when we drop down to the daily time frame, 4 hour, 1 hour, and all of that, but we'll narrow it down even more. But this is pretty much an area of liquidity where every time price taps into it, there's a massive push up that tends to happen. So that's what we're watching out for this week as well. As price comes back and taps into this area on the daily, we're already seeing that price is pushing back up bullish. So if I'm going to look for any buying opportunities, I'm going to try to understand what is the limitation of my trade. So the first one is going to be coming up to this almost 42, let's say 300 mark. And that is because that is a previous resistance of all that consolidation. So if price can clear out of this entire zone, then we're coming back and tapping into this area. And then there's a very high chance that price kind of just rejects into this area, and then we'll hang around here until we get more fundamentals that are coming out. Or if price has enough momentum to push back up a little bit higher, it can do that as well. But if we're looking for any buying opportunities as of right now, we first need to break past that 42,300 mark. You come onto the 4 hour time frame, we are already starting to break the previous 4 hour highs and then tapped into this high here as well. To look for any continued buy opportunities, again, you wait for that high here to be broken, and then you look for your buying opportunities. I would highly suggest waiting for a 4-hour or a 1-hour bullish close before looking for any buying opportunities to establish that there is a support right at this. If not, you have your quick scalping opportunities, just zone to zone here. But other than that, we don't have any swing trade opportunities just yet on US30. Coming on to GJ. Monthly time frame, we're tapping into the current highs and the previous highs here as well. So right now we're just sitting at the support of 189,300. And then we're looking for buying opportunities to the upside right around here. So that's kind of the range that we're sitting in at the moment, which is that 191.8. And if price can continue pushing back up bullish from here, this entire range is for around 242 pips. So we have a pretty good range here. It's just going to be small or slower movements in general. So this is where you're going to start marking up your zones. So this is a support zone that price is tapping into and rejecting at the moment. So that's what we're sitting at right above this. If this daily candle can flip back up bullish, then you have your buying opportunities to come to the upside for that 200 pip range. Same thing, you want to wait for your support to be formed here. So when you look at GJ, for the most part, price reacts around this area, and all of this is the 4-hour consolidation. Can we just reject that and continue pushing up? And then you can look for your buying opportunities. If not, you want to make sure that before you look for sells, you're waiting for this entire area to be cleared out. So that is also a quick scalp or even day trade opportunity, but really nothing more than that. And if you want longer term buy opportunities, then you have a longer term trade to the upside coming into 191.8. 1-hour time frame, also just sitting in that resistance zone of that consolidation here to the past. So to the left here. So just kind of following the same movements. You don't really have any longer term buys or sells. You're just waiting for price to break below that 189.3 mark. Then you have your sells to the downside, or price respects the support here and continues back up bullish. Now coming here to UJ, starting off with the monthly. So we're starting to see how the dollar is losing its strength, as we were talking about on the fundamental side. And the yen has a lot more strength here compared to the dollar, as investors flock over to the safe haven assets instead. So on the monthly candle, we're going to mark off the current bottom wick. If price can continue breaking below that, then we know that we're coming right back down into these previous supports of around 143.4 mark. So right now we need to break past that 146.3. You have, or actually, you have this entire range to the downside for almost 300 pips that you can target if price can keep breaking its own monthly low here. Come onto the weekly time frame, and you start to see how that's a break and retest resistance, support, and then support here before price continues down after that break and retest. So same thing here. This week we're already making a bottom wick rejection, so you can mark off a zone here as well. What you want to see here on the daily time frame is, or even the 4-hour, it's clear support being formed, and then push up to the upside for any buy opportunities for about 200 pips to come back and respect that previous area of support right here on the daily time frame. Once price broke that low, it was pretty much a straight melt to the downside in that 200 pips. So we have yet to wait for some corrective moves. You can drop down to the 4-hour time frame, and so here you want to see some established support, so bullish closures above the zone, and then you're looking for buying opportunities to the upside. If price breaks below that 146.5, then you have those clean sells to the downside. So UJ is pretty straightforward, and EJ is quite similar to GJ as well. And then you had on the monthly time frame, EJ sitting at this monthly support of 156.3. It's already made a top wick rejection, so you can mark that off too. And that's kind of the range that we're sitting in at the moment. So you have that range to range or that zone to zone trade that you can take. based off of lower time frames. So when you come onto the weekly time frame, you already have this entire resistance that was being formed, and then price rejected that, closed right below the zone, and then the next or the current weekly candle already pushing back down bearish. It's still quite early on in the week, and we're still waiting for a lot of fundamentals to come out, so you want to be a little bit more careful here. But you can look for some scalp opportunities, you can look for some day trade opportunities. If I want to narrow in my levels even more, I would say that you have potential longer term trades right below this area. So you want the wick right here to be broken, and then you have sales coming back down into that 156.3. Anything in between, these are just scalp opportunities. It is about 127 pip range. So when I say scalp opportunities or day trade opportunities, it's basically because you're not going to be trading every single session. So you need to take into account all the moves that are going to happen in the sessions that you're not trading or the sessions that you're sleeping through. Also taking into account any stop loss areas that you're going to have and the spread when you're entering the trade, etc. So that's why you're going to have that zone to zone trade, but you're most likely only going to end up taking a scalp or a day trade. And then if you're looking for a longer term trade, it's when these levels here are respected. So price breaks below this and continues down, or it breaks above 161.3 and then pushes back up, and you have those buy opportunities there. Coming over to gold, this one's a little bit more interesting because we just keep pushing, but again, that is an uncertainty from the investors. So 2959.4, I do think we're headed right up into that 30,000 or even 3,100 mark. I think we do have the potential to tap into that. Let's drop down to the weekly. That's the highest that price had gone. So that's the range that we're looking at. And then on the weekly time frame, you have the support area that's being formed right here, 2858.3. And then you also have your weekly resistance. So as long as price can flip above this area, we know that the weekly level is also going to be in our direction to the upside, and we can look for those buys to go up into that 2959 or even that 30,000 mark. Come on to the daily time frame, and we're starting to see that resistance being formed right into that area. Price is respecting that. You also have this daily bottom wick rejection. So anything in between, that's our day trade, that's our scalp opportunities that we're looking for, and this is your 2881.5 mark. If you're catching trades somewhere in between here and then you're looking for selling opportunities, you want price to break its own low and continue to the downside, that's how you're going to look for your scalp turn into a swing trade, where you're going to look for your scaling opportunities here. If you're looking for your buys, you're waiting for price to have enough momentum and enough volume to pretty much keep breaking past this area. Otherwise, you just have that zone to zone trade that you're looking at. So this week, it's quite straightforward. It's more of just narrowing in your levels, looking at the lower time frames, the 4 hour, 1 hour, daily, 30-minute, all of that, using multiple time frame confluence, and also just looking at the economic data points and trading more of the high volume times. So pretty easy. You have a lot more inflation data that's coming out this week as well. Other than that, make sure that you guys are looking at proper risk management strategies too. There's a lot of consolidation that's happening. A lot of people end up blowing their accounts in a market environment like this. Understand that on higher time frames, we've had massive movements in the last couple of weeks. So there are going to be, 1 or 2 weeks where the market slows down a little bit. You see a lot more consolidation, market collecting more orders, generating more liquidity, etc. So those are your days to kind of slow down a bit, look for your scalp opportunities or even day trades, and then look for your swing trades in the following couple of weeks. As always, if you guys have any questions, feel free to reach out to me on Instagram at SharmaFX. Other than that, I hope you guys have a great rest of the trading week, and make sure you're trading safe.